Hey guys, welcome back to another challenge update. For the 22nd week, Alphabet fell quite a lot. I was expecting it to stay within this pink channel, but by the end of last week, where this blue dotted line is, Alphabet closed quite a bit below the channel and finished at 90.62, so that's where this is. Because I have quite a bit of shares, 500 shares, and the stock fell about $2.50, that basically took me down by 1200. So now I'm sitting at a loss once again. So just like before, this happened, but eventually I do expect to go back up. So let's take a look at what the stock is doing this week and where it's likely to go. Because we've broken out of this channel, what will most likely happen is the stock will go down and double the range. So we might go to like around the mid 80s or low 80s. If I draw a line for this Friday, which is the 23rd, I think there's a pretty good chance we're going to see the highest being around this level, like 95. And we could go back to retest the lows back in November, and that would be around the $83 range. So I might sell a call at around 95 and then sell a put at 83. Because if I take a look at just the stock price without the lines for a second, you can see we've been going down following this blue line, this exponential moving average, and the stock seems to have a very hard time going above it because it spent most of its time this year below. And when we do get a pop up, it's not sustainable. You can see how it just bounced a little bit on the top, but then it fell through. And it tried to break out over here last week. That did not happen. So there was a massive push downwards. And even if we get a strong market this week and the stock moves up, I think ultimately it's going to come back down and retest this low before we see the retest of the highs of the last couple of months. So here's a look at the option chain for Google, and I'm going to choose the expiration date for this Friday, which is 4 days away as usual. For my first put, I maybe want to add one in at around 87 because that would lower my ACB. As the stock goes down, I want to buy at least 100 shares on every $10 decrease. So I bought some shares at 96. Now the stock is in its 80s, so I might want to buy some here. So at 87, I can get about $51 premium for this put. So I will sell this, and I'll try to go for 54 and submit that.
Order filled.
There we go. So that one just filled. Now, because the lowest I think Alphabet can fall to, at least for this week, is around 83, I'm going to sell a put spread at maybe like 82, between 82 and 79. Try to get 4 cents for it, and maybe I'll just sell 8 of those. And then for the call option, maybe I'll go with 95 or 94 is not bad either. It's only a 10 delta, so maybe I'll choose like 18, and I'm going to go with a 5 quantity. So this should get rid of all of my stocks if it hits 94. But I think if it does go up there, it's not sustainable. Like I mentioned, it's going to fall further down.
Order filled.
Okay, those 5 calls at $94 got filled, and I'll drop this down to 3 cents.
Order filled.
So that one will get filled as well. Okay, so for this week, I have 8 put spreads and 5 calls and 1 put at 87. The 87 put has the highest chance of getting exercised. If we look at the delta here, it's at 24, whereas the other two, 82 put spreads only 3.7, and then the 94 here is at 11. So most likely all of these will expire out of the money, but the 87 does stand a higher chance than the other two expire in the money. So I'll move this to 94, which is a little bit lower. So all the premiums added together is going to be 168. I'm going to subtract commissions. Okay, so 161 after the cost of trading, which in Canadian dollars is 221. And let's see what the IV is for this week. 35. So last week, nothing expired in the money. I hope it's the same thing this week. So I'm just continuing to earn the net premiums on that. But if the stock does go up a little bit, even like $2, then I should be back in the black by next week. So we'll see how it goes. Thanks a lot for watching, and I'll talk to you in the next one.